All right, hello, and welcome to a video where we're going to be looking at the recent stance and focus of both budgetary and monetary policy based on a request I had yesterday. Really going to hammer in on why they're both expansionary at the moment, some of the key policies that they've been going towards, and what they've been trying to do with those to achieve the domestic macroeconomic goals. So this is Unit 4, Area Study 1. Technically, these are all one area study. Your schools may have broken them up into individual SACs, but that is up to their own individual discretion. So let's get into why we're doing this. So PCAR requires you to have a knowledge of the focus of budgetary policy and monetary policy over the last 2 years. This includes the stance of their policies, expansionary or contractionary, as well as some of the reasoning behind that stance. So it's all well and good to say that they've been doing expansionary policies recently, but if you don't know why they've been doing that or the reasons why they've been doing that, it's not going to get you full marks. And that's what you want. You want full mark answers because you want to get those high study scores. So let's get into budgetary policy. So the medium-term fiscal goal for the current government has been for a long time to achieve fiscal consolidation, which is moving towards surplus so we can start repaying some of our foreign debt and all of those kind of things. So our budget surpluses can balance out our budget deficits and all of that. However, the unexpected nature of severe weather events, as well as the COVID-19 pandemic, which is massively important over the last 2 years, has led to a significant shift towards an expansionary stance. And therefore, the focus has moved from fiscal consolidation, which we just talked about, and now has moved towards economic recovery. So we are trying to limit the negative impacts of the COVID-19 pandemic and then get into economic recovery. So moving us to kind of technically have hit now as we started moving into an expansion again, as growth is now positive. However, currently the country's a mess. We've got multiple states in lockdown, COVID cases of Delta strain everywhere. This recovery may be short-lived and we may have to move back to it later. Therefore, more and more discretionary measures have been put in with a strong focus on increasing household income via tax cuts and tax offsets, as well as job creation through fast-tracking infrastructure projects, decreasing business taxes, and all of those kind of things. It's also important to note the difference between the estimated budget outcome for 2020, and the actual outcome, which is yet to be released. So we were expecting a $180.5 billion deficit. However, it's expected to be less based on the government spending a little bit less on some measures than they originally said when they announced them. Same kind of deal with this year. They announced about $100 billion deficit. However, this protracted Sydney lockdown is costing, I think, up to $3 billion per week, as well as the lockdowns in Victoria, South Australia, currently now Queensland. There are all these extra unforeseen expenses that, although the government budgeted a little bit into their budget for COVID-related shutdowns, I don't think they expected the amount that has happened because of the Delta strain, and they've been quite open about this in their press conferences recently. So budgetary policy has been expansionary to focus on the economic recovery related to the COVID-19 pandemic. So some recent policies and links to the goals. So I've tried to marry up a few policies and how they work similarly, because realistically, once you explain the policy, the step-by-step in how it impacts aggregate demand is exactly the same. So the extension of the $1,080 tax offset for low and middle income earners, or double that for a dual income household, job seeker payments, which was doubling the rate of welfare paid to households, now it's a little bit less. And there was also $750 stimulus payments to pensioners during the start of the pandemic last year. This increases the disposable income of households or discretionary income, increasing private consumption spending and therefore leading to an increase in aggregate demand. So then how we tie that into each of the goals? Well, firstly, for low inflation, if aggregate demand increases faster than aggregate supply, this can create demand inflationary pressure and then move inflation from 1.1%, where it's currently at, more towards the goal of 2 to 3% on average over time. For strong sustainable economic growth, so if aggregate demand is increasing, it sends a signal to businesses to increase their production, therefore helping to increase the rate of economic growth. An increase in aggregate demand also creates an increased derived demand for labour, as businesses employ more labour resources to help meet the increased demand, therefore lowering the unemployment rate, bringing us closer to achieving that goal of full employment. So anything that affects private consumption spending directly, you can then follow those step-by-step logics. Then we've got reducing the tax rate for small and medium companies to 25% from the 1st of July, as well as the extension of the instant asset write-off scheme. Both of these motivate businesses to invest and expand, therefore increasing private consumption spending and leading to an increase in aggregate demand. So if aggregate demand increases faster than aggregate supply, this can create demand inflationary pressure, same as before. Same with sending a signal to businesses to increase production, strong and stable economic growth, increasing derived demand for labour, decreasing unemployment, helping us achieve this goal of full employment. All these step-by-step processes stay exactly the same. So you just need to know where we are in terms of that goal and where we are moving to try and achieve it. One other thing you could do for this is go with any infrastructure project. So you could talk about the $6.7 billion spent on the Westgate Tunnel, and that increases government spending or government capital expenditure via G, therefore following all those exact same processes again. So infrastructure projects, similar kind of flow. We just got to get to which component of aggregate demand it impacts and then get into how it affects each of the goals. So now getting into monetary policy. So monetary policy is considered to be expansionary if the cash rate is below 3.5%. As you'll hopefully know at the moment, the cash rate is 0.1, so that is far below that. It is very, very expansionary. So the current cash rate is expansionary. If the RBA happened to increase the cash rate in the near future, this would not be contractionary stance. It would be expansionary as long as it remained below 3.5%. If the RBA decreased the cash rate to they did decrease the cash rate to 0.25% in April 2020, then further decreased it to 0.1 in November 2020, where it has remained since and is expected to remain there over the next few years, as we're not expecting the economy to recover for a little while after this pandemic. So this means that the RBA purchased or bought bonds from financial institutions to increase the money supply in the short-term money market, therefore increasing liquidity and putting downward pressure on interest rates and the cash rate. So when we get into some of the kind of workings around that, so we can use the changing the cash rate to 0.1% to make various links to domestic macroeconomic goals. However, it's important to note that in the current situation in the pandemic, the RBA has chosen to focus on strong sustainable economic growth and full employment, as the goal of low inflation is unlikely to be achieved in the downturn or the current pandemic. So you can then use transmission mechanisms to help explain the links to these goals. So reductions in interest rates increase the cash flow of households with variable rate home loans. This then increases the disposable income, which should in turn increase private consumption spending and aggregate demand. So therefore, then you just tie that into those exact same step-by-step process we talked about with how it then links to the goal with budgetary policy. This also means that businesses will be required to pay less on their existing debt, making them more likely to increase private investment spending and aggregate demand. So therefore, at the moment, using businesses as your example rather than households works really well if you're talking about recent events. Then we've got reductions in the cost of credit mean that businesses are more likely to conduct private investment spending. So it's cheaper to borrow money. Businesses are more likely to borrow money to invest and expand and therefore increase the overall amount of aggregate demand. Lower relative interest rates domestically also leads to less demand for the Australian dollar as foreign investors remove their investments from Australian financial institutions in search of greater returns overseas. This leads to an oversupply of the Australian dollar in the foreign exchange market and leads to a depreciation, which helps to increase demand for Australian exports while also limiting demand for imports, which increases aggregate demand, therefore then links into all of our domestic macroeconomic goals. So there's a lot there in how you can really focus on the business side of monetary policy and how that is working to then achieve strong sustainable economic growth and full employment. We're not really targeting low inflation because, it's really not too relevant at the moment. It's not going to be stimulated anytime soon. Therefore, the RBA can focus on these other areas. And that's pretty much it for the recent stance and focus of budgetary monetary policy. If you want to see these things in kind of text form, in a bit more detail, if you want to steal things from your own notes, there are 2 blogs that I recommend from my website, therunningeconomy.com. There is this one called Stancing with Wolves, which is up on the blog. Further down, there's another one called Modern Monetary Messaging. These are really useful in terms of the amount of detail they give you about why the stance and focus are the way that they are, why the government and the RBA are acting in the way that they do. If you have any questions at all, email me at sean@therunningeconomy.com. If there's anything I can do to help you out, let me know. More than happy to help out. Other than that, I hope you have a wonderful day and I'll see you next time. Bye.